hearty welcome for the Study Circle on Income Tax Act 2025, Lecture Series 1. An initiative to empower and equip the faculty members of commerce disciplines to orient on the Income Tax Act 2025. This series of lecture is arranged on virtual mode to happen on every Friday between 7:30 p.m. to 8:30 p.m. Welcome to all the faculty members. I now request CMA Rajesh sir to take over the session.
Thank you, Vaishnavi. So, hearty welcome to all the participants. So, the Income Tax Act 2025 has been implemented with effect from the 1st April 2026. So, the Department of Professional Accounting thought it relevant that we will take the initiative of equipping and empowering the faculty members to handle this course on income tax from the academic year 2027-28. The Government of India, through its Ministry of Finance and the Income Tax Department across the country, they have started conducting the PRARAMP, the Policy Reform and Responsible Action for Mission Viksit Bharat 2026. They want to be, or their aim is to be a very friendly, taxpayer-friendly ambience with wide importance in reducing the redundancy and the complexity in the existing Income Tax Act. So today's lecture series will completely focus on the Income Tax Act, the basics and the overview. So basically, if you look at the Income Tax Act, the comparison between the 1961 Act and the 2025 Act, there is a huge reduction or 1/3 reduction in the sections. From 819 sections, now it is reduced to 536 sections. From 14 schedules, it is increased to 16 schedules. And from 511 rules, it has been reduced to 333 rules, from 399 forms to 190 forms. And one of the major reforms with this Income Tax Act of 2025 is they have made it very easy referencing. The provisions pertaining to a particular head of income is arranged in a sequence. Earlier in the 1961, when the act was passed, subsequently almost after 50 decades, so we had to do a lot of amendments every year. So we need to bring in new provisions. So it was maybe a provision pertaining to salary is kept somewhere else. So we need to have a no referencing, using the word notwithstanding, subject to, with reference to. So all these words have been removed, and it is giving a very conceptual clarity. It is very easy for referencing now in the Income Tax Act of 2025. Now in the current year, we'll be having a parallel operation of this Income Tax Act of 1961 and the Income Tax Act of 2025 from the 1st April. For the academic teaching, for the academic year 2026-27, we'll be referring to assessment year 26-27. So the assessment year 26-27 refers to the provisions of Income Tax Act of 1961. So for the current AY, so when I refer AY, I refer to both the academic year as well as the assessment year. So we'll be referring to this Income Tax Act of 1961. So the current filing, maybe the ITR 1, 2, 3, 4, and for the companies, 5, 6, 7 for the trust. So everything will happen under the old ITR forms, under the Income Tax Act of 1961. The pending assessment and the reassessment will continue under the 1961 provisions. The appeals which are filed till 31st March will continue under the 1961. And currently, whatever the appeals are being filed for the earlier period also will continue under the 1961 Act. Whatever is pertaining to the financial year 2025-26 will be dealt only with the Income Tax Act of 1961. The Income Tax Act of 2025 has a parallel track in the current year. So from 1st April 2026, it has been implemented. So the payment of advance tax, which has commenced from 1st April for the tax year. So if you look at the acronym, it is called tax year, TY. It is effective from 1st April 2026. So the advance tax payment will be done under the ITA 2025. And the TDS deductions which happened during the current financial year. So like no more we will have financial year, we will call it as a tax year. From the year 26-27, we will be referring only to the word TY. And the henceforth the new assessment from 1st April 2026 will happen under the Income Tax Act of 2025. But for the current academic year, we will be referring only to the assessment year 2026-27. But we need to make a referencing to the students with reference to the advanced tax provisions and the TDS sections, maybe when they are facing the interviews. So we need to refer to the new provisions. What are the key takeaways? So why this Income Tax Act 2025? It simplifies the language, simple English, removes obsolete provisions, the provisions which are no longer required, it is completely removed. It consolidates the provisions pertaining to a particular topic in a sequential form, and it is restructuring the entire act. So we had around 800 plus sections that has got reduced to 536 or so sections. The concept of tax year is introduced, replacing the term assessment year and the previous year. So from the next academic year, we will be referring only to the word called tax year. Henceforth, we will not have previous year or financial year or assessment year. We will refer it to tax year. The Act defines the virtual digital assets, including the cryptocurrencies and the tokenized assets. So what do you mean by the cryptocurrencies, the virtual digital assets? In the 1961 Act, we had a lot of differences with regard to the treatment of the virtual digital asset. But the Income Tax Act 2025, the provisions are made very clear. So these are the key takeaways when you look into the Income Tax Act of 2025. The tax audit report forms the assessment year 2026 versus tax year 2026. So the tax year 2026, it refers for the period from 1st April 2026 to 31st March 2027. So we'll be doing the assessment after 31st March 2027, but we'll be referencing only to the year 2026-27 henceforth. Earlier in the Income Tax Act of 1961, we had three forms. Forms 3CA plus 3CB plus Form 3CD. Now, these forms have got unified and a single Form 26 has been introduced, merging all the three forms. This 3CA plus 3CB plus Form 3CD, it is a combination when an assessee is audited under the Income Tax Act only, or if the assessee is audited under any other provisions, how to fill up the relevant forms. So there was a combination, Form 3CA plus 3CB plus Form 3CD. And Section 44AB, with regard to the presumptive taxation and with regard to the audit under Section 44AB, when you show less than the specified percentage in the Act, now it has got substituted with Section 63 in the Income Tax Act of 2025. The due date is 30th September under both the Act. Earlier in the Income Tax Act 1961, we had item-wise disallowance reporting. We need to give detailed item-wise disallowed reporting, the sections. It was fragmented in different parts of the Act or in different sections. Now it is a single consolidated disclosure. It is completely rationalized. It is grouped together and it is ITR aligned. The wordings are made much easier so that it will pose a lot of ease of taxation for the professionals, for the assessee, and to the business people at large. There are new definitions which have been introduced. Section 2 completely speaks about the definitions in any act. In the Income Tax Act of 2025, Section 2, subsection 1 speaks about the word accountant, reference, giving a reference to the section 513, subsection B and subclause B. Amalgamation, books of accounts, business trust, charitable purpose have been respectively defined in section 2, subsection 6, subsection 19, subsection 21, subsection 23. So these definitions are to be followed in letter and spirit, interpret with the various heads of income. And there are some specialized provisions. Ritual assets are specifically, they are recognized. So what do you mean by virtual digital assets? So when you talk about the cryptocurrencies, Bitcoin, the government of India came out with a proposal of taxing the virtual digital assets and gain at the rate of 31.2%. So the definition of virtual digital assets are more clear. It is well explained. Modern terminology, what is relevant to the current day, is adopted. Improved treatment of the digital economy. There are so much of transactions which are being done in the digital mode. So the treatment of the digital economy is much wider. Simplified interpretations, notwithstanding word and then subject to, in relation to, in referencing to. So much of indirect speeches and indirect referencing have been completely eliminated. The provisions are completely integrated into the compliance system. So we are moving towards a principle-based system, and then stronger reporting framework. So pay your taxes and hold your heads very high. As a responsible citizen, pay your taxes very high. And then the stronger reporting framework, when you simplify the system, it provides a ease of doing a lot of activities for the SSCs. And then the anti-avoidance or anti-tax avoidance administration with regard to the double taxation and tracking of transactions, the improvement in the annual information system, and then supporting the international best practices. See, across the globe, there is a wide shift in the taxation, the global taxation or the international taxation. So we are making it much friendly, where we have got a lot of associated enterprises and transfer pricing. So across the border, we are bridging the trust. So building borders and bridging trust is the caption of the Government of India and the Ministry of Finance. So we bridge trust across the countries with regard to the taxation. And then the legislative structure is very well defined. The more powers are given to the CBDT, Central Board of Direct Taxes, with regard to the reforms, with regard to simplification of forms, so that there will be more autonomy to the CBDT here. Residential status, section 6, it remains the same. Key changes: basic residency rule, there is no change. The stay of 182 days or 60 days in the current year, the rule remains the same. Categories: resident but not ordinary resident, and non-resident. So henceforth, we will be referring the first category as resident. The higher income threshold. So any persons of Indian origin or a person who comes to visit India, the residency test is henceforth 120 days. And if they are having 15 lakhs or more in the income from other sources, so again, there is a taxability for the particular type of assessees. And then the phrase "for employment outside India" is replaced by the term "for the purpose of employment outside India." So which gives a much better explanation, the wider scope with regard to the residential status. And then the place of effective management for other than individuals, the POEM. In short, we refer it to the word POEM. So the place of effective management is defined very clear. So how to identify and implement the place of effective management for the non-individuals to track the residential status is completely taken care. And then income from salary, section 15 to 19. Earlier it used to start with section 17, salary was defined in section 17. Now it has moved to 15 to 19. The chargeability is in section 15. Salary and perquisites are given in section 16 and 17. Profits in lieu of salary is defined in section 18. Deductions from salary is introduced in section 19. There you have got the table which has been introduced. So you will have no professional tax, the entertainment allowance, the standard deduction in the tabular form. So which is very easy for referencing. And we need to draw reference here as per the India's new labor code. Basic pay plus dearness allowance must constitute at least 50% of an employee's total CTC. So when you have this basic pay plus dearness allowance, which becomes fully taxable. So just for tax planning purpose, I've just quoted this provision here. So when we advise the people with regard to the taxability of the allowances. So as of now, we have 30%, 20% structure. Now 50% of this total salary structure becomes fully taxable because the labor code advocates. So 50% of the employee CTC should be a part of the basic pay plus dearness allowance. Both the components become fully taxable. Now income from salary, these provisions are the same across the 1961 and 2025 Act. Salary is taxable on due or receipt basis, whichever is earlier. Employer-employee relationship remains essential. The salary of MP, MLA doesn't constitute under the income from salary. Standard deduction continues, subject to the prevailing Finance Act provisions. Taxability of allowances is reorganized. So the list of allowances are clearly defined. What is the quantum of allowance that can be claimed under the exemptions? Under what conditions? They are clearly mentioned. Retirement benefits clearly classified, such as your gratuity, leave encashment, your provident fund. So it is clearly classified. And leave encashment provisions, they are simplified. Simplified in the sense the taxability of leave encashment. Like earlier, we used to have a lot of subcategories. Now those subcategories have got consolidated. Gratuity provisions continue through the relevant schedules. Taxability of pension is retained under income from salary, whereas the taxability of family pension goes under income from other sources. Employer contribution continue under the specified limits. ESOP taxation framework is retained. The employee stock option plan, which comes as a perquisite, it is retained. The uniform treatment of taxable perquisites. The deductions under salary, the section 16 under the 1961, we used to call it as the entertainment allowance, the standard deduction, professional tax paid. So now we have got a table form and then better arrangement of exemption provisions through schedule. So you will have a list of exemptions that can be claimed as a deduction from the salary income, and easier compliance for the employer and the employee. So for the employer and the employee, it becomes very easy. So when you have got such provisions, so we have a very consolidated approach with regard to the income from salary. Next is income from house property, section 20 to 25. So when you have this section 20 to 25, chargeability is under section 20. Determination of annual value is under section 21. Deduction from the house property comes under section 22. Arrears of rent and unrealized rent received subsequently is under section 23. Property owned by the co-owners is under section 24. So owner in relation to a property is defined in section 25. With regard to the treatment of arrears rent and unrealized rent, which are subsequently received, it is brought under section 23. So the treatment has become much easier. And the salient features of this co-ownership. So co-ownership provisions are separately covered. So when you talk about the co-ownership, people having the joint ownership, maybe the husband and the wife, between brothers, parents and children. So it is clearly defined. Next is arrears of rent Unrealized rent provisions are clearly clarified. How to treat the unrealized rent. The arrears of rent is taxable only on receipt. Recovery of unrealized rent subject to the conditions which are prescribed is specifically covered. Annual value computation, that is determination of the annual value, the gross annual value and the net annual value, it is reorganized. Vacancy allowance provisions are retained. And you have a single integrated computation mechanism for income from house property. The third head of income is profits and gains of business or profession, section 26 to section 66. So section 58, the special provision for computing the profits and gains of business or profession on a presumptive basis in case of certain residents. So that is mentioned under section 58. Now the new Income Tax Act aligns with the new micro, small and medium enterprises classification based on the turnover limit as based on the investment and the turnover limits. So when you just look into the enterprise category, so the combination of current investment or revised investment limit or current turnover limit or the revised turnover limit, so we will be able to match with the MSME Act. So now the Income Tax Act draws reference to the MSME Act for the classification of the MSMEs. The chargeability of profits and gains of business or profession is from section 26 to 66. So how to, like, what are the income that is getting covered? And then manner of computing profits and gains of business or profession is section 27. The rent, rates, taxes and repairs and insurance is section 28. Deductions related to employee welfare is section 29. Deductions on certain premium. So what are the premium? You make the payment. It comes under this particular section. Deductions for bad debts and provision for bad and doubtful debts. A table is introduced. So the simple reason why this table is introduced is the provision for bad debts is applicable for different categories of business entities. So when you look into this bad debts provision and the actual bad debts, so there's a table now, so which will have a very easy referencing. The other deductions are defined in section 32. The provisions for depreciation is clubbed under section 33 now. General conditions for allowable deductions. So what are the conditions which have to be satisfied to allow the deductions is maintained in section 34. Amount not deductible. What are the cases in which we will disallow in the certain circumstances is section 35. Expenses. So payments not deductible in certain circumstances. Again, table is inserted for explanation of specified persons. Section 36. What are the deductions that are allowed only on actual payment basis is section 37. Certain sums deemed as profits and gains of business or profession is section 38. The computation of actual cost, the actual cost of the treatment, it is covered in section 39. Special provision for computation of cost of acquisition of certain assets is governed by section 40. And then the depreciation provisions or the depreciable value of the depreciable assets is under section 41. So these are the major changes which will affect our teaching up to the earlier slide, because it is being frequently used. And for the advanced studies, the postgraduate level and the professional level, so we will again start with section 42. The foreign exchange fluctuations, how to capitalize them, the gain or loss. We have a formula which is being introduced. So directly you apply the formula, we will be able to determine the value. The taxation of foreign exchange fluctuation is section 43. The amortization of certain preliminary expenses, section 44. The expenditure on scientific research. So we will be giving a deduction here as well as in the subsequent place, either 200% or 100% deduction. So that is covered under section 45. Capital expenditure of specified businesses will come under section 46. Next, expenditure on agricultural extension project and skill development, section 47. Tea development account, coffee development account, and rubber development account. So when an assessee is involving themselves in such business, we have the abatement which continues in section 48. Site restoration fund business is covered by section 49. Special provisions in case of trade, profession, or similar association, section 50. Amortization of expenditure for prospecting certain minerals, section 51. Then amortization of expenditure for telecommunication services, amalgamation, demerger, and scheme of voluntary retirement, section 52, where a table has been introduced with regard to have a clarity on the treatment of, like over how many years we'll have to amortize. Full value of the consideration for transfer of assets other than the capital assets in certain cases, section 53. The business of prospecting for mineral oils is section 54. And then insurance business is covered under section 55. Like insurance business, like people who are dealing with insurance business, insurance commission is specifically covered. Next one. Maintenance of books of accounts is section 62. So what are the books of accounts to be maintained? And then the tax audit is section 63. Special provisions for computing deductions in case of business reorganizations of cooperative banks is section 54. A formula has been introduced. Interpretation for the purpose of section 64, what is that reorganization of cooperative banks is covered by section 65. The interpretation happens in section 66. The fourth head of income is income from capital gains, section 67 to section 91. The chargeability and the definition comes in section 67. Capital gains on distribution of assets by company in liquidation. Like when a company is in liquidation, when they distribute the assets, so that comes under section 68. Capital gains on the purchase by company of its own shares or other specified securities is section 69. Transactions what are not regarded as transfer, the negative list, is section 70. Withdrawal of exemption in certain cases is section 71. The mode of computation of capital gains is section 72. Cost with reference to certain mode of acquisition is mentioned in section 73. A table has been introduced for easy referencing. Special provisions for computation of capital gain in case of depreciable assets is covered by section 74. Special provision for the cost of acquisition in case of depreciable assets is section 75. Special provision for computation of capital gains in case of market-linked debenture is section 76. Special provision for computation of capital gains in case of slum sale is section 77. Special provision for full value of consideration in certain cases is section 78. Special provision for full value of consideration for transfer of share other than quoted share is section 79. Fair market value deemed to be the full value of consideration in certain cases. A good example is when you sell the land and buildings, maybe the consideration could be less, but the fair market value or the guideline value, what is fixed by the authorities, the revenue authorities, seems to be higher. So the higher of the consideration or the fair market value will be taken into consideration. So which is covered in section 80. The treatment of advance money received is section 81. Profit on sale of property used for residences is covered in section 82. So capital gains on the transfer of land used for agricultural purposes, not used for agricultural purposes, not to be charged in certain cases is section 83. Capital gains on the compulsory acquisition of land and buildings not to be charged in certain cases, section 84. Capital gains not to be charged on investment in certain bonds is section 85. Capital gains on transfer of certain capital assets not to be charged in case of investment in residential house, section 85. Exemption of capital gains on transfer of assets in case of shifting of industrial undertaking from urban area is section 87. And then exemption of capital gains on the transfer of assets in case of shifting of industrial undertaking from urban area to any special economic zone is section 88. Extension of time for acquiring a new asset or depositing or investing amount of capital gains is section 89. What is adjusted, what is cost of improvement, and what is cost of acquisition? It is section 90. Referencing to valuation officer for any clarifications to determine the value of the capital asset is governed by section 91. The fifth head, the residuary head, like what is not covered under the earlier four heads, will be covered under income from other sources. Sections are 92 to 95. The chargeability is section 92. What are the deductions that are available under the income from other sources is 93. Amounts not deductible is 94. Profits chargeable to taxes, section 95. We call it as clubbing of income, the total of other person's income included in the total income of the assessee. So transfer of income without transfer of assets is governed by section 96. Chargeability of income in transfer of assets is 97. Transfer and revocable transfers, they are clearly defined in section 98. Income of individuals to include income of spouse, minor child, etc. is section 99. So liability of a person in respect of income included in the income of another person is section 100. Aggregation of income. How do you arrive at total income? Adding the 5 heads of income, applying the clubbing of income and the intra-department adjustments and inter-department no adjustments or set off carry forward of loss. So is governed under section 101. Treatment of unexplained credit, unexplained investments, unexplained assets, unexplained expenditure is from 102 to 105. Amount borrowed or repaid through negotiable instruments. Hundi. Hundi is nothing but a negotiable instrument drawn in a vernacular language is called as hundi. Section 106. Charge of tax is defined in section 107. The set off of losses under the same head of income. Under the same head of income is section 108. Under any other head of income is section 109. Set off and carry forward of loss from house property is 110. Set off and carry forward of loss from capital gains is section 111. Carry forward and set off business losses 112. Set off and carry forward of loss computed in respect of speculation business is 113. Set off and carry forward of losses computed in respect of specified business is 114. And the set off and carry forward of losses from specified activity is 115. So treatment of accumulated losses and unabsorbed depreciation in case of amalgamation or demerger, etc., comes under section 116. The treatment of carry forward and set off losses and unabsorbed depreciation in business reorganization of cooperative banks is 118. Carry forward and set off of losses not permissible in certain cases is governed by section 119. In the current Act 1961, we call these deductions as ATC or Chapter 6A deductions, so which are maintained from section 122 to 154. So deductions to be made in computing of total income, section 122. Deduction for life insurance premia, deferred annuity and contributions to Provident Fund, section 123. Deductions in respect of employer and assessee contribution to pension scheme of central government, section 124. Deduction in respect of contribution to Agnipath scheme is section 125. Deduction in respect of health insurance premia is section 126. And deduction in respect of maintenance, including medical treatment of a dependent who is a person with a disability, is section 127. Deduction in respect of medical treatment, etc., is section 128. Deduction in respect of interest on loan taken for higher education is section 129. Deduction in respect of interest on loan taken for residential property is 130. Specified residential property is 131. Deduction in respect of purchase of electrical vehicle is shifted to 132. Deduction in respect of donation to certain funds, charitable institutions, etc. is section 133. Deductions in respect of rent paid is 134. Deduction in respect of certain donations for scientific research or rural development is section 135. Deductions in respect of contributions given by companies to political parties, section 136. Deductions in respect of contributions given by any person to a political party is 137. So you have a separate section for donation given by companies and donation given by any other person to the political parties. Deductions in respect of profits and gains from industrial undertakings or enterprises engaged in infrastructure development, etc., is section 138. Deductions in respect of profits and gains by an undertaking or enterprises engaged in the development of special economic zone is section 139. Special provision in respect of specified businesses, section 140. Deduction in respect of profits and gains from certain industrial undertakings is section 141. So deduction in respect of profits and gains from housing projects is section 142. Special provisions in respect of certain undertakings in northeastern states is 143. Special provisions in respect of newly established units in special economic zones is 144. Deductions for business engaged in collecting and processing of biodegradable waste, section 145. And deduction in respect of additional employee cost is section 146. Deductions for income of offshore banking units and units of International Financial Services Center. We call it as IFSC. This IFSC is a new type of specified business zone which has been introduced or which is established across the globe, and we have IFSC centers in India too. So whenever a business is established in IFSC region, so how the deductions or the tax holidays will be treated is defined in section 147. Deduction in respect of certain inter-corporate dividend is section 148. Deduction in respect of income of cooperative societies is 149. Interpretation for the purpose of section 149, like how do you define the cooperative societies? Like earlier, even in the business or profession, the cooperative banks, we had a interpretation section. Similarly, here for the cooperative societies, we have an interpretation section 150. Deduction in respect of royalty income, etc., of authors of certain books other than the textbooks is 151. Deduction in respect of royalty on patents is section 152. Deduction for interest on deposits is 153. Deduction in case of a person with disability is section 154. Now, what are the rebates and reliefs that are available to the assessees? Rebates to be allowed in computing income tax, section 155. Rebate of income tax in case of certain individuals is section 156. Relief when salary, etc., is paid in arrears or it is paid in advance goes to section 157. Relief from taxation and income from the retirement benefit account maintained in a notified country is section 158. So agreement with foreign countries or specified territories and adoption by central government of agreement between specified associations for double taxation relief is section 159. Now let us concentrate on the new tax regime. New tax regime is tax regime where no deductions are allowed or deductions are completely restricted. You have a flat rate of taxation and it is extended to other than individuals too now. So tax on income of certain manufacturing domestic companies is section 199, which is 25%. Tax on income of certain domestic companies is section 200, you have 22%. Tax on income of new manufacturing domestic companies, section 201, a table has been introduced to define the new manufacturing domestic companies. New tax regime for individuals, Hindu undivided family, and others is section 202. Tax on income of certain resident cooperative societies is section 203. Tax on income of certain manufacturing cooperative societies is governed by 204. Special provision for minimum alternate tax and alternate minimum tax is governed by 206. TDS provisions and related forms. So TDS on salary is section 392. Currently it is 192. Now it is easy to remember, it becomes 392 in 2025 Act. TDS on other payments, you have got section 393 where a table has been introduced. The nature of payment, deductor, the quantum, how much has to be deducted, and the percentage with any conditions. So a table is introduced for easy referencing. And form number 24Q, which is filed for salary, is substituted with form number 138. And then form 26Q, which is filed for non-salary for the TDS forms, is substituted with form number 140. So these are the new income tax forms. So form 15G or 15H, which is given by the senior citizens and other persons to the banks and other assessees for not deducting tax at source, is substituted with 121. Employee investment and HRA declaration to be given to the employer in form 124. TDS certificate for salary, form 16 is renamed as form 130. Annual tax statement, the AIS statement, which has got referencing to so much of specified financial transactions, TDS, TCS, payment of taxes, refund, foreign assets, etc., is substituted with new form called 168. The TCS certificate on certain purchases and payments, especially when you purchase a four-wheeler, maybe above a specified limit, you will have to pay TCS. And then on foreign travel, purchase of foreign exchange currency on which TCS is applicable. So the certificate number is form 133. Quarterly return on salaries is 138. For non-salaries is 140. TDS on property, rent and virtual digital asset. Earlier we had 26 QB, QC, QD and QE. Now it is shifted to 141. Foreign remittance information. Form 15CA has to be filed with the help of a chartered accountant. Now it is substituted with form 144. And then foreign accountant certificate, what was issued in form 15CB. Now it is form 145. So the quarterly TDS return for non-resident 27Q is substituted with 144. The statement of perquisites and perquisites and amenities annexed to form 16 in form 12BA. Now it is form 123. The tax audit report and the statement of particulars, form 3CA, 3CB and 3CD, it is substituted with form number 26. So with this, we feel very happy to conclude the first lecture series. Hope we have given you an overview of the Income Tax Act 2025. So we are very happy to give you this orientation or equipping yourself in the Income Tax Act 2025. So if there are any questions, you can post it in the chat box or connect with us. So wish you a very happy weekend. So let us meet with a new topic on next Friday at the same 7:30 p.m. to 8:30 p.m. So thank you so much for your patience listening. Thank you.